All right, hey there, good morning everybody. Chris Franks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on Tuesday, April 27th, 2021. Guys, I'm about to say in San Antonio, but nowadays we're in Boerne, Texas, just north of San Antonio, beautiful area. If you ever make your way down to Texas, check out San Antonio, check out the Hill Country, check out Boerne. I don't think you'll be disappointed. It's a great place. Anyway, hopefully y'all are doing well. Lots of talk about Elon selling, Tesla selling 10% of their Bitcoin holdings and locking in about $200 million in profit. There's a lot of, you've got very emotional. Tesla is kind of a cult, basically. It's like Apple products, right? People see these companies as they can't do any wrong, and then their leaders as these prophets, basically, and so you get a lot of people that are upset, and then you get other people say, oh, it's just and they find some excuse to where it's okay to still evangelize Elon Musk and Tesla and stuff like that, kind of like what they do with Michael Saylor. But we'll take it, we'll look at that today and take it, talk a little bit about that, look at some of the charts there. The best thing you guys can do, though, as traders, is not to get so emotionally involved in all that. It's a waste of time, guys. It's not going to make you any wealthier. And if the things you're doing don't make you wealthier, then why are you doing them, right? When it comes to trading, anyway. Let me see here. Who's here? Spiral Architect. Sean, what's going on? Chris Day checking in. Crypto Mowgli here. He says, beautiful weather down on the south coast of England this afternoon. But when I call, it's worth being inside, huh? Well, don't miss too much of that great weather. Who knows how often we get that, right? Hey there, Bianca. Good to see you. She says, beautiful day there in the Netherlands. Hank checking in as well. Telluride, what's up, man? He says, one of the very few cloudy days they get there in the Rocky Mountains. Man, see, I love this, man. You guys are everywhere. It's so absolutely just fantastic. Hey there, Mark. Good to see you, man. You have to leave just before the halfway mark. Flamin' Gala, what's up? Nevlusian's here. Rami Crypto is here. Claudio, good to see you. LXT is here as well. Let me see. You guys speaking in code there in crypto, it looks like. Let's see here. ARM, what's up, man? Telluride says, not interested in investing in Tesla, really. But I wish more billionaires were interesting and fun like Musk. He's definitely a character, that's for sure. That's for sure. As far as it comes to Tesla, I mean, Tesla's been around since what, 2003 or so, I guess. The only reason they can even, market profit right now is because of these carbon credits that they get to sell out on the market. And even this last quarter, if they hadn't sold Bitcoin, they wouldn't have made profit for the quarter. Even selling all those, credits that they have. So, did they sell to, to kind of make it look like they have a profitable quarter? I mean, they end up having a profitable quarter, but you got to look at how is profit derived, right? So the reality of it is, it's expensive for what they do. You can take your position on whether, they should be able to continue to exist, with government help or not. That, that's up to you to figure out. But, at the end of the day, like I said, without those carbon credits, without the sale of Bitcoin there, they wouldn't have been profitable this quarter. So, take it for what it is. But it also kind of points out the other thing that I keep trying to explain to you guys, which is, these big players, these big companies coming in, they're going to sell. They're not going to, they're not going to buy and hold forever, contrary to what they may say or what you may want them to do. So you just got to be careful with that. That it's a double-edged sword. You guys get all excited because, they all buy in. It makes price go up. That's great. But at the end of the day, that's a whole bunch more supply that's concentrated in their hands now, and they can dump all at once. And that's where the difference comes from. When it comes to price moving up or down, it's where's that concentration of supply or demand coming from? So, if you're going down and somebody's got a whole bunch of it, that's a lot of Whereas the general retail out there, a whole bunch of retail having just a few pieces, they don't generally work as a group. And then you have these large interests that hold a lot, and they're able to buy or sell. They hold a lot of cash they can buy, or they hold a lot of the instrument they can sell. And then the market's going to kind of move with it. Man, I'll tell you what, Hank, I accept crypto payments, with what we do at TWC, and I'll tell you what, it is nowhere near ready to be mainstream. It is such a pain to accept crypto payments. I mean, everything from refunds and, if you think about that, if you're a company that offers refunds, I mean, I guess you could always make it that, okay, you put your money in, pay a Bitcoin, and you're going to get refunded in dollars. But, for instance, if you go through like Coinbase Commerce, just to accept payments, and and if you look at the refund area there, you have to refund the entire thing. It just, and then you have to pay the fees to do it. And it's just a big mess. It really is to accept crypto right now. Hopefully it'll become easier in the future. If more and more people are using it, it should become easier. But at the end of the day, man, it's tough. It's tough, I'm no Tesla, not a former pioneer of electronic payments. Yeah. I don't know what that has to do with anything out there, man. You're evangelizing Tesla. You're evangelizing, Musk. It's ridiculous. They're big companies, big people, and they're going to sell. It's period. It's the end of the day, guys. It's what it is. Just, history is wrought with all these things where big people got involved and they never became what everybody thought they were going to become. Just because you get people with money or with some kind of celebrity, buying into it doesn't mean that particular technology or anything will become permanent. They could lose their money on it, or they could make money on it, and then it goes away eventually, and then they go into something else. So, again, guys, this is historically the way that markets are. It's historically the way that business is. It just is what it is. That he's not doing too bad lately? Well, no, of course not. I mean, if your government gives you the ability, if it gives you money that the people, that it's forcefully taken from people, which is what taxes are. You can't say no to tax. If you say no to taxes, you go to jail, right? I mean, so you can say no, but then you end up in jail. I mean, who wants to be in jail? So really, taxes are being taken from you, at the point of the gun. And then they're given to companies like his, in terms of all these tax breaks and everything they get. And on top of that, then you have these carbon credits. And, at the end of the day, if they're profitable, a lot of times these companies are only profitable because of all this extra money they're getting from everybody else. They're not profitable in their products. Now, the hope is that they become profitable at some point, but there's no guarantee. Could just be a lot of wasted money. Right now, again, it's, they've been in business for almost, 20 years now, and the only way they're profitable is because of the credits and because of selling Bitcoin. But if you're a company and your profits are derived on your trading, I mean, but you're not a trading, you're not a trading desk. I mean, what does that really say? I mean, you take advantage of situations as they are, sure. But that's life. That's what it is, right? Yes, I know tax breaks are given to all U.S. companies. I know. That's my point. That's my point. It's not to all U.S. companies, by the way, guys. It's certain companies, and the tax breaks that you get are given at a certain extent depending on your size or what field you're in or whatnot. So, the taxes aren't, given to you. Tax breaks aren't applied equally. We'll say that as well. Yeah. But, again, the idea that you need taxes, if you're a debt-based economy, if you're a debt-based economy, you don't need tax revenue. Tax revenue is a form of control of the populace. So, I mean, that's the way it is at the end of the day. Now, if you're something other than a debt-based economy, which I'm not sure really there's anybody out there anymore that is, then there's something else to be said about it. But if you're a debt-based economy, taxes, your tax revenue doesn't mean squat. I mean, it really doesn't. You don't need them. That's the whole idea of the modern monetary theory there, is the idea that taxes are a form of control. rather than something that a company actually needs. So, it is what it is. But anyway, I think there's a lot of people are getting way too excited about Elon and Sailor and whatever. And then that's why the feelings were hurt when they, when Tesla sold 10%. And I don't believe for a second Elon's with the whole, it's a liquidity, proving liquidity or whatever. Liquidity, is proven all the time there, It was proven when they bought, and when other large people have sold. There's been lots of large sells. So, I don't know. It doesn't matter. At the end of the day, the fact is they're going to sell. They're not going to hold. Some people are upset because they said, we're not going to sell. But, again, speaking of that tweet that he made, it seemed like to me that he said that they were going to accept payments in crypto and then they weren't going to sell that. So, I mean, to that extent, to me, that's the way I read that, was that, they're going to accept payments for Tesla and whatnot, and then they're not going to sell that. Now, I don't believe for a second they're going to hold it forever either, especially, how silly would that be if Bitcoin ends up, breaking down and dying? We hope it doesn't, but we don't know that it won't. Or heaven forbid, it drops down to 3,000. I mean, does it make a lot of sense to hold from 60 to 3? I don't know. That's going to be a lot of havoc on their books there if that happens, and that'll probably affect their their share prices and whatnot. So there's a lot going into it, guys. There's a lot, as I continue to say, when companies get involved with crypto and whatnot, and they hold it on their books for treasury stuff or whatever. I mean, there's just a lot going on there. So yeah. Anyway, hey guys, join us at howtotradetowin.com. We'd love to have you there. Just absolutely stupid amount of educational video content there, guys. I say over 70 hours here. We're probably close to 80, and every week we add a couple of new hours. If you're tier 3, that's where all that 70 plus hours comes from. We do a live stream for tier 3 members on Monday, looking at Elliott Wave. And then we do one on Wednesdays looking at tips, tricks, and techniques to get you into trading right away, whether you have ever traded a day in your life or not. Give you simple rules. You buy here. If this happens, you buy here. You put your stop loss here. You put your take profit over there, kind of thing. So a lot of great stuff going on there, guys. Come check us out. We would love to have you here, obviously. Let me see here. So, yeah, if you'd been following us for the last, I don't know what, week, gosh, since up here, I guess, right? So basically the last almost 2 weeks now, you would have done pretty well. We've continued to give you the, to talk about downside, giving you, upside invalidation levels. And, we actually came down this weekend here. Now on Friday, my evening BMA video update that I did for our members, I think we were right in this area here. Let me see, what was Friday? The 26th, 5th, 4th, 3rd, 23rd? Yeah, so we were kind of doing this. And I was looking, this is a 3, and this is a 4, and then looking at a 5 a little bit lower down here. Over the weekend, it printed a triangle. It is what it is, but we did get the lower low expected. It hit one of my earlier targets from, I don't even know, probably a week prior or so. And then we had this strong move up on Monday. And so the question is now, is this count still playing out here? Do we still have a 5th wave down to finish out? Or is this the bottom here and we're heading up? And so the first place we're going to look here is right here in wave E. And that would give us, this wave E of this triangle here, this wave 4, wave E of wave 4. That's right there around 56,350. And so if we advance above that, then that increases the odds that the bottom's in and we're heading up. If we get rejected prior to that and we drop on down below the pivot, that increases the odds that we're heading down here to around the S1 pivot here to get us that wave 5 to finish the move down, or at least this partial down, and then we'll get the reversal up. So right now we're kind of in that area there. Where can we look here? The one thing we can look at is, we're right here within this red range here, which had this move back up and then this move out here. And so the drop below the range lows here, if we look at that, you know, we had less volume on the secondary drop over here. So less interest at that level. So, you know, that's good. You don't have continued selling going on down there. So if you're bullish, that's the kind of thing you want to see. You know, could you look at this maybe as a double bottom here? Possibly. You know, so you have your first bottom right there, wave 3, and the other one over here, wave 5. In that case, you would have a... Here we go. You'd have a target based on that. Let me see here, right here. Right there at about 55,670. We are up to 55,389 right now. So that's a pretty close, you know, to that target there. Keeps it below the purple line. Keeps it around the R1 pivot. Last night during the BMA video update here, we talked about this kind of diamond looking thing going on. And by the end of the video, I was talking about that I expected to see a breakout here and a, you know, a target of the R1 pivot, which we've gotten. I thought we might actually get a triangle here, but we didn't. You know, we've just gotten, you know, this move here. We only, if we were trying to get a triangle, it would only be A, B, C here. But, you know, what I'm looking at potentially then is maybe this is an A up, and then this is a B down, and then we've got 1, 2, 3, 4, and we're getting 5 up there. So, you know, again, no clear are we going higher or not. Now, if we jump out to the daily, I know everybody wants to look at daily, go, look, 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 it's definitely the daily. It may be. It may be. You know, again, as far as the daily goes, we have this this doji down at the bottom. Not doji, but almost a hammer here. And then we've got this nice bullish engulfing candle here as it bounces off the S1 pivot. You know, these are good things. For now, price is kind of still below that pivot area. Now, if we can get an impulsive move up through the pivot and above this swing high here, so this is 57,594.70, you know, that definitely increases, you know, the confidence in the idea that this is a bottom here heading up. But even if it is, the idea is, okay, so what's going on here? Well, as we've been talking about, you know, if this is kind of the bottom prior to getting to this low here, then we're looking at maybe a large triangle here. So you get your A down, your B up, your C down, and then it'll give you a D up toward that 60,000, 61,000 area maybe. And then it'll get you an E pulled down here probably to the pivot, this pivot area, depending on how long it takes to get up there and come back. Because, you know, these pivot, this is the daily pivot. It'll be gone at the end of the month. But that would get you right there around 55.5. And so you can get this A, B, C, D, E. And then, you know, if that triangle is to play out like that, then that gives you a pattern target here of, let's see here. God dog it. There we go. Like I said, if it gets right back here around this pivot area, you know, that gives you that pattern target up there of about 77,243. So that's possible. You know, I mean, it's also possible that, I don't know, that maybe this is just an ABC down and this is done and this is, you know, the new move up. But we won't know that until it gets above wave B. If it's only in 3 waves and it gets rejected prior to wave B and pulls back, you know, then we're looking at it likely being this triangle still, you know, finishing out. But if we get 5 waves up through wave B there, then that says, okay, this is the bottom here and this is the next bullish push up, which then potentially has an even higher target based on that though. So, yeah, you know, I mean, it's, do we know what's going on at the moment? No, not for sure. Not yet. But, you know, with each one of the, especially if we get above this, this wave E, this purple line here, wave E of 4, you know, especially if we get above that, at least that adds confidence to the idea that we're probably headed up. And all those other scenarios all say, you know, that we would head up. It's just if we get rejected prior to that, you know, we'll be looking for this move down here to the S1 pivot. This 1 hour and 4 hour S1 pivot right around 44,900 or so. So, I mean, that's kind of, you know, where we're sitting at the moment here. Let me see. Yeah, definitely multiple possibilities at the moment, but no guarantee yet. You're gonna have a lot of people out there guaranteeing bottoms in and everything, and it looks pretty good at the moment. But until we're really kind of breaking above this triangle here, the end of this triangle, the price is still really vulnerable to falling down. And so when we look at the DXY and we see what's going on there, and we say, okay, well, so it hit my target here, at this demand structure EQ. I mean, almost to the point. Right there. And then it looks like maybe we've got, 5 waves up here as a leading diagonal maybe. And then we've got this pullback about 61.8, 65, I guess right there. And so, breaking out above this swing high here may say, okay, we've got a 1 and then a 2, and that gives us a minimum 3 right here at the R1 pivot at about 91.449. Zooming out a bit, if we look at this count coming down here, that's the count I have coming from that top there. Could this just be an A? Get an A and a B and a C? Yeah, it's possible. But the fact that, that we've pulled back 65%, I think really, I think at that point it's up to price to really prove that it is. If you got an A at 32 and 38.2 and then a B up and then it's, that's something different. But when you're pulling down all the way to 65%, and you can see that we've got a count that works there. So, to me, I think that if that's that if we continue up from here, I don't think that's wave A. I think that's, would be the wave 2 there. Now, again, the other way we can look at this, remember, we haven't actually gotten above, this 94.741 area up here, this wave 4, circle 4. So it is possible, that this could still be maybe an A, B, C, W, A, B, C, X, and then A, B, C, Y, get like a double zigzag going up there. And then this would be, instead of this 4, this would be 4. So that's still a possibility as well. I don't think that's the case, but, we can't just pretend it's not, a possibility, right? Either way, if that is or isn't, I mean, either way, we should be headed up. And so the first thing we need to do is get above this wave circle 4 here at 91.428. If we can pop above that, that's the first clue that that bottom may be in. Continue up through wave B here at 92.325. Should add a lot of confidence to that, and really we should feel like whether it's the second zigzag or wave 3 in parentheses here up, either way we should be looking for that higher up there. And so why is that important? That's important because, again, if this is moving up here, then that's going to put downward price pressure on Bitcoin. So, is Bitcoin going to correct further? It may. Nobody knows right now. I mean, nobody ever knows for sure what's going to go on, but really right now you've got too many people out there claiming that things are definitively guaranteed A, B, or C, whatever they're saying. And that's just silly, guys. If you trade that way, it's not even trading, it's going to be losing money. You're going to lose money with that kind of thought. So, yeah. So, just some things to watch, Let me see here. So, I mean, again, a lot of people are going to go out there and play off the dollar significance, First of all, a lot of people are bearish dollar because they believe the nonsense that's spoken out there by everybody else who probably even has less, understanding than they do of currencies and global finance and stuff, macroeconomics. But, again, they see somebody say something that they think makes Bitcoin look good, so then they just kind of grab onto it regardless of what the reality is. You shouldn't be doing that. If you find yourself jumping on to something and just kind of repeating it ad nauseum, but yet you really don't have an educational background in that subject matter, you might want to back off a bit. Because, again, the odds are, that you're going to be wrong, that you don't know what you're talking about. And that's not just here with this. This is in life, guys. But how many times do we ourselves, if not people we know, but, I've done it before, do we pop off on some subject matter that we think we might know about, right? Just because it sounds good to us. Not that we've had any real education or experience in it, right? Yeah. I grew up fixing my own cars, and so I have a mediocre of knowledge there as far as auto repair goes. But that was a very long time ago. Cars were nowhere near as as tech as they are today, as tech heavy as they are today, and so I couldn't even pretend to really know what's going on with engines today compared to what I could have done 20 or 25 years ago, 30 years ago. But as human beings, we tend to do that. We tend to jump onto something that we really don't have any clue about, and then we just kind of go and talk as if we do. The problem with doing that in the markets is that it it often leads to lost money. Especially if you're a trader. I mean, if you're an investor that's holding for the long term, that's something different. But if you're a trader, again, then you're really subject to those emotions in a much greater degree because you look at those smaller time frames. And if you think that a thing means a thing, and price does something that shakes you a bit, you could end up questioning and losing, and it ends up just being a bunch of ridiculousness for you. There's no reason to put yourself through all that. So yeah. Let me see here. Jeff Bear, what's up, man? He says, nice to see a 360-degree analysis when you analyze Bitcoin. Most people on YouTube just hyper-focus their analysis on just Bitcoin. A stronger DXY is a headwind, and the stock market affects Bitcoin greatly. Yeah, and again, I think it all just responds to the dollar. I mean, I know we talk about often that it seems like Bitcoin may be affected by the stock market or something. I think it's all just playing out versus the dollar. Again, because if we look at the stock market, these are stocks valued in dollars, right? And we look at Bitcoin, and Bitcoin here valued in dollars. And so if the value of the dollar rises, as I continue to say, it means that that it takes less dollars to buy that thing because now they're more valuable, right? And so that kind of, in general, that's the way we kind of think about it. And so that puts that downward pressure on price as the dollar strength rises. Again, I think there's a lot of, I think it's nonsense. I really do. This idea that if there's some great, big kind of downturn in the economy, whether just locally here in the U.S. or globally, that, Bitcoin's going to somehow shine. I can't say that it wouldn't, just because, again, guys, I'm smart enough to know that I can't possibly know whether it will or won't, guaranteed. But what I do know is Bitcoin is extremely volatile. And so it's a risk-on asset. When the markets are risk-on, when everybody's just buying whatever, then Bitcoin becomes, in focus. But when it's a risk-off environment, when the economy takes a hit and starts diving, most, these large funds and people and whatnot, that, they deleverage out of their risky assets first because the risky assets are going to take the biggest hits. So the idea that Bitcoin can be practically, the riskiest asset out there, and that it's somehow going to shine at a time when risky assets are being shed, I mean, that just doesn't really make any sense. Again, I can't say it definitely won't happen, but man, oh man, it's never happened. I don't understand how it would happen. Because the goal of being in the markets is to not lose your money, to some great extent. You're going to lose money as a trader, guys. I mean, that's just what it is, day in and day out. Every so often, you're going to lose money, even if you've been doing it for many, many years. Because you're not always going to be right. That's just part of the game. That's why risk management is so important. Risk management, and so these large funds, these large people that are in there, they don't get rich by being stupid. So risk management is key. At the end of the day, they don't want to lose that wealth that they've created, or maybe it's been handed down to them, whatever. But especially if they've created it, they don't want to lose it by being stupid. They deleverage out of risk. So, Hank says he's never met so many contagious disease experts and virologists as he did in the last year. Says I'm dating one, though. Yeah, everybody becomes an expert. Politics, virology, like you said there. whatever it is. And part of that is because social media gives people a platform to be heard, and so they feel like people need to listen to them. It gives people a grander feeling of self, I think, than what they normally would. So again, I'm not a big fan of social media. You guys know that. I think we're going to see a lot of, over the next few decades, a lot of issues. People are going to have a lot of issues. I think we're going to see a lot of it. There are going to be all these what do you want to call it? There's going to be all these things that psychologists and psychiatrists are going to come up with, all these different ailments now that people will be able to be prescribed medication for. Oh, that's an awful thing. But and I think a lot of it's going to just be based off social media. It's crazy how much it affects people. It really is. Andre says anyone can be an expert on non-exact sciences. Well, they can think they are anyway, right? Let me see here. So, hey, what's going on, Black Tech? I see you checking in there. So yeah, we look at all this, and so we think of everything. And, guys, I know you're probably sick of hearing me talk about this idea that there's maybe some much larger top coming in that we're kind of putting in right now that's going to result in some really, really bearish scenario across all markets and whatnot. But, at the end of the day, guys, it's not just because, I want to say that that's what it is. I mean, it's when you look at everything out there. Again, you've got so much euphoria in these markets now. Everybody seems to think that it can't go down. There's no such thing. It's a brand new bull market. Based on what? I mean, the bull market's been in progress for, 11 years now, right? It's been like since 2009, 2010, so 12 years maybe coming up. The only thing we had was last year's little drop there, a little drop. And of course we'd called that from basically where it started to where it dropped to. But, again, it's continued up from there. And I think that's what's got people all like, oh, it's going to continue going up forever. But if we look at things like, if you look at margin debt, I've talked about that before. And so that just basically says how much credit people are taking out of the markets, right? And so if you look at it as a percentage of the of your U.S. disposable income, right? So you're talking about in February, as of February, because, margin debt is you can't really use it as a leading indicator because it comes out afterward, after things have already happened. So, but if you look back in February, I think it was something like around 4.6%. And that's as a percentage of the disposable personal income here in the U.S. And you go, oh, well, that really isn't a whole lot. But then if you think about that in terms of the dot-com bubble and the great financial crisis, so 2000 and 2007, at that point, they were about 4% there at those highs. So margin debt right now is significantly higher than it was at the last two bubble tops. We had the dot-com bubble and we had the the financial bubble there. And if that doesn't get you concerned, I don't think you're doing it right. I don't think you're paying attention. I mean, it's huge. And is that even it? I don't know. Maybe it's higher, but we know that it's at least that based on, the numbers that we get. And everybody's trying to find a reason of why it's okay. Well, if it's okay, this would be the first time in history it's okay. And what do we know about financial markets? We know that old adage that, that people say, this time is going to be different. It isn't different. The market doesn't do things differently. It just continues to do the same thing over and over and over again. The new market participants say this time it's different at every top. Now, does that mean does it mean it rolls over today or tomorrow? No. But it means that this is something that says, it's much more likely the end rather than the beginning of a bull run. And I think that's really important to keep in mind there. Because if you don't understand that, then what that means is you're going to be looking to buy the dip as price falls. And all you're going to do is keep buying lower and lower. And it's just going to keep going lower and lower. And every time it pops up for a dead cat bounce, just a pullback, a recovery for a little bit, you're going to think, oh, well, look, I was right. And you're not going to take any profits that you might get on that rebound, or at least cut your losses a lot less. You're going to ride up because you think it's going to continue going higher. And then it's going to turn around and go back down. And then it's going to be even lower than you were before. And now you're in even greater debt. And so with margin debt being so high, what it does is, it's okay. Margin debt is fine if things are going up. The problem is when things stop going up, when they all of a sudden reverse and come down. Because all of a sudden people have to cover and do all these other things. And what that means is now that little bit of drop, or that decent bit of drop, all of a sudden becomes a much huger drop. So, it just makes it even worse. So as long as price is going up, everybody's like, oh yeah, it's great, it's great, it's great. No worries about it, not worried. Who cares, right? But then it really comes, it really comes home when it drops. Is it because of access of new retailers to stock market? It could be. But, at the end of the day, it's the idea of how much that margin debt is increased. I had some charts. I don't know where they went. I'll have to probably bring them up on Friday. But when you can see visually how significant the divergence is between the S&P and in the margin debt there, that credit, and it's pretty crazy. It really is. Let me see here. James is convinced that things are okay because we didn't have Robinhood before and social media talking about investing in the market for a younger generation. So here's the thing. Something I talked about probably about a year ago or so. So within the last couple of years, we've had new products brought to market. These are the mini futures, the micro futures are recently. Schwab slices, where you don't have to buy a whole share, you can buy partial shares of a company. All these things, and so these similar things have happened at other market tops. Again, running into the dot-com bubble. Running up into the great financial crisis. What you find is, as the bull run matures. And remember, retail doesn't get in at the bottom when they should. They're scared, they're fearful, they think it's going to keep falling, right? Retail tends to jump in at the top, right? We know this. This is historically proven time and time again, right? And that's also the time when these other products make it easier. The other things we have brokers with 0% trades, right? You're going to pay a little bit in the trade, or maybe you're going to pay more on the back end when you remove your money or something. But, these brokers with these, come trade with us for zero. We're not going to charge you anything to do the trades, right? Stuff like that. These are all things that happen at the top of bull markets generally. So, yeah, maybe we have a greater number of people able to access the markets, but it doesn't change what's going on with the markets. It's still the same thing we see every time. It's just, it makes it easier as you get toward the top there. It maybe, everybody's making it easier. Retail wants to get in, and so then you got people like Robinhood, whatever, who gamify it. People going to lose large bits, and it's hard to explain to somebody who hasn't been through a few of these bubbles. It's really hard to explain to a new trader because, again, they're the new trader. They're the one who comes in, and to them it seems like everything's just fine. Everybody's making money. Everybody's getting rich. This can't possibly end terribly. It can never end, right? It's going to go up forever, right? Or at least for the next 5 or 10 years, right? Reality says that history would argue otherwise. So, again, and me telling you this is not, of course, trying to put down anybody or whatever. I'm trying to explain the mindset. And a lot of new traders come in here and will say, oh, no, that's not me. You don't know what you're talking about. But you're the new trader. I'm the guy that's been doing this for a quarter of a century now. I've now been through, in the markets, I've been through dot-com bubble. I've been through great financial crisis. I'm here where we are now. I've been in multiple markets. I've been, equities and Forex and whatnot. So commodities and going through all this. So, I find it kind of silly, again, if you're a new trader and I say something like that, you go, oh no, you don't know what you're talking about. This goes back to what I was talking about at the beginning there. We tend to overemphasize. We think we know more than what we do, and we downplay what little we know. Or we tend to think we're better at doing a thing than what we are, and we tend to downplay, how much worse we are. And, this is just being human. It is what it is. But it also is dangerous because it leads to lost money. I'm not saying that I know exactly what's going to happen here. I definitely don't. Nobody does. And anybody that's telling you otherwise is just trying to either hope they're correct and then they can go on saying, oh yeah, look, I said it. Or they really believe the nonsense that they absolutely guarantee can know what's going on. That's just silliness, guys. You got to be careful with that. But, new traders continually get taken in by that. Let me see here. What do I think about DeFi? Do I think it's some finance, some changing in traditional finance or something? I think it's the jury's still out on that. I know everybody else is touting it as some new kind of thing that's going to just totally redo finance. And it's possible. But at this point, it's way too early. And the fact that we're this far along in a likely bubble, that we're, at this point at the top here, anything that DeFi might have the chance to be could just easily be gone with that move down. It could just, and that's what I keep talking about Bitcoin, guys. Again, I think it's got, a future. I think it's going to be around, which is why we're invested in. We stay invested in it. But I'm also not silly enough to think that it absolutely cannot die off, that it absolutely cannot lose. I think that's just absolute nonsense to think that it can't. Again, Bitcoin has never been in a bear market, in a economic bear market, where we've got a recession or, heaven forbid, a depression going on. So as much as everybody else say Bitcoin's the future of this, and that, it may look like it now, but if we go through something like that, again, history is wrought with things that look like they were going to be this next great big thing, and then some large recession or depression came in and you never heard about it again. It's just the nature of things, guys, because as long as there's money flowing freely, it's easy to put it into these ideas. But the minute that money doesn't flow freely anymore, these ideas tend to die out a lot of times. And so this is not me saying that it's definitely going to die out or anything. I'm just saying I'm not silly enough to think that it can't possibly do that. So I'm always watching. I'm always paying attention. I want to make sure that, that I don't lose what we've had in here since 2017. Again, I don't see any reason to believe that's going to happen at this moment. But I'm always open. I'm always watching. For now, I think, even if we got some large pullback with Bitcoin, some really huge pullback, I'm still thinking we've got further upside right now. So I'm still bullish on Bitcoin. Don't get it confused. Let's see here. So, that's what I kind of think about, DeFi there. As we're looking at that. And by the way, guys, with these things going on and things getting crazy like they are and all this money just flowing around, and this talk of bubble tops possibly and whatnot, that doesn't mean you can't be in it making money. As a matter of fact, one of the quickest, easiest places to make money is when the market gets to that point, when it's just euphoric. Because you have all this retail money just flowing in, and you've got big companies which have to put their money somewhere, they feel like, and so they're going to put it in there. See, you've got all this money in there, and it's good to go until it isn't anymore. Again, when we talk about the margin debt is fine as long as price is continuing to rise. But if there's a drop, that could cause a cascade coming down and just exasperate the whole thing, just make it so much worse. So, don't think that when somebody talks about bubble tops and everything that it means, oh, you can't go in there and trade. Sure you can. As a matter of fact, it's easier to trade usually in that situation because, the movement upward is so easy. But when it's done, the thing is you have to understand that it's not going to do that forever. and that there's going to come a time of reckoning. And you want to make sure that you're paying attention to that so you know that you need to get out. So you can lock in those profits and you can make money while everybody else is just thinking it's going to go on forever, and lock all that in. And then it turns around and comes back against you, and you're not losing money on it, you're losing very little, and everybody else is losing tons and tons and tons. So, that's another misconception a lot of times by new traders. They think because you talk about bubbles and things being in a bubble that you shouldn't be trading, you can't trade it. No, it's a great place to trade usually, because it makes it so easy. Because, it just pushes so hard and so continuous until it doesn't anymore. So, yeah. Let's see here. Oh, let's see. So we looked at Bitcoin there. We looked at the DXY. Oh, Bitcoin dominance. We talked about this last week. And I told you, well, potentially we could see a reversal here, but I'm thinking it's probably going to come on down to the S3 pivot here at about 70.5 retracement. And it looks like we're headed down there right now. We've still got the weekly here pushing lower. And this is this weekly. So, again, this will continue to push down through Sunday, if it was to continue to fall. So that's fine. But, we definitely want to see where does this close at the end of this week now. Because if we look at last week, there was potentially a bullish divergence here. See this point right here? Right there about 2240 or so. So you got the higher lows. And then you have the lower lows here. But now it's dropped lower. But guess what? That doesn't mean anything, because remember, this is the weekly. It doesn't mean anything until the candle closes. So if Bitcoin dominance picks back up before the end of the week, we could still see this print here, guys. We could still see this bullish divergence print. And at that point, I would be really interested in hey, I think Bitcoin's headed up for its, its next move up. But until that happens, if we were to end this week down below this swing low here, that definitely closes out any chances of getting some kind of bullish divergence there on it. But, from sitting here going through it, I think we've got 5 up, and so it looks like we're working on 3 down here. And so then we should look for, 5 more back up, maybe toward this 85 level. But this may be the final, this move up here may be the final end all. That might be the last hurrah for Bitcoin, this time around, and then it heads back down. We'll see what happens. But if this is an A and a B and a C, it should lead to lower lows below, what is this over here? Below 35.41 here. And that was that 2018 low right there. So, maybe that gets you the next move up, and then it moves back down below, and then that marks the low of the bear market coming the next one there. Because again, this is, like I said, this is January of 18 here, and the low of the bear market was what? Was December 17th or whatever, somewhere right around there of 2018, like a year after the high there. So it's this move right here was 2018. Then drop there. So maybe we see that coming down. But again, I don't think a lot of people understand just how big a drop it could be, or just how severe it could be. I talked about that last time, and I talked about some of the things that Robert Prechter has talked about, who's been doing this a lot longer than I have. In ways that it could play out. We could, even if what we're talking about, what I'm talking about here as far as some kind of depression coming in, we could have a sharp drop, which would still take, a few years. But, again, it could turn into something much more complex, because we're talking about this, this grand super cycle from 1788 to now. And, it could take, I don't know. Like I said, I don't even really know. And Robert Prechter was, saying, hey, maybe it takes even 50 or 60 years if it becomes some sort of extended, drawn out kind of thing. And you say, oh my gosh, but how could that happen? That can't happen. Sure it can. Sure it can. If you're talking about, correction off of a 233-year move up, yeah, that's not a whole lot of time overall, right? But that doesn't mean that everything would continue to drop for 50 or 60 years. Basically what that means is more of you'd have this drop and then up and then some drop and then just a lot of sideways more or less going on with it is what you'd probably be looking at in that case. And so there's going to be winners in that. There's always winners in the markets, guys. Everybody doesn't just go out all at once and that's all there is. You can even think about crypto. Bitcoin hit its top there in 2017 December. Altcoins really kind of hit their top there a couple of weeks later, a week and a half, 2 weeks into January. I think it was right around January 8th, 14th, somewhere right around there of 2018. And then what happened? So then Binance Coin continued up while everything else more or less headed into this bear market, right? And then if you think about after that, 2019, I guess it was, Chainlink was moving up, right? And so, there's always winners, even in markets that are down and, economies that are rough and whatever. There's always companies that do okay, and some actually do pretty well. But yeah, a lot of possibility in that. Or maybe this doesn't happen at all and it does continue going up. Again, guys, I can't guarantee we're going to have some big turn down here, but man, if you look at 50, 60, 70 different sentiment indicators, again, they're all reaching these levels that are beyond what they were in the dot-com bubble, GFC, the Great Depression. It's hard. I don't know how you were supposed to be bullish when all these things that were normally at extremes at these other bubble tops are even further extremes now. I mean, that's akin to saying, well, it's just different this time. Well, what in the heck would make it? Why would it be different this time? That doesn't make any sense. But, a lot of times people talk about it's easy, it's different this time because that way, they don't have to explain why it's different. They just have to say, oh, it's different. And all of a sudden their position, that thing, that's the beginning of some large bullish, cycle, like in the stocks or whatever. And all of a sudden, their position is supported now. It's not, though. Right? Right? Let me see here. So let's see where we're at. If we look at Nasdaq here. I tell you right to jump in. Right! Let me see here. By the way, TLT is where it's at the moment here. As long as it stays below wave 4 here, I'm looking for this wave 5 push up at least toward 140, 142. Maybe all the way up here toward the swing high up here, at around 143 maybe. If it drops below this wave 4 here, I'll have to take another look at it. It could be, just A, B, C, and then heading back up. But in either case, this looks like a leading diagonal that's kind of playing out here to finish up. So TLT, of course, government-backed securities there. Bonds, government bonds. Okay. So NASDAQ, I think we've got 4 done here. It's possible we've got this wave, this first 5 waves, subwaves up of wave 5 here. We didn't quite get to the swing high, the all-time high. The all-time high here is at 14,050 and 38 cents. And we actually hit this morning, this is 27th, yeah. We hit $14,048.34. So, basically missing it by about $2 or so, 2 points on that. Say dollars, 2 points. And so then we've got this pullback, and that's it gapped up and then dropped. So I'm thinking this may be like a 1, and we're getting an A, a B, and then get a C down here around the pivot. That 50% retracement is right below it there at 13,880. And so if we get that A, B, C here on that pull down, then that gives us a target almost all the way up here where we're kind of looking at it already as it is, like where we've been looking at. So if we do this and say we hit the pivot there, we've got 3 right here at about 14,440. And then we've got 5 up here, 14,568, right there at the 1 hour, 4 hour R4 pivot. And that would be minimum target there. You know, wave 5 could overextend to 14,608 or potentially even up here toward 14,794. But still kind of looking for that to go up. The only thing that would change this count at the moment here would be this drop down below wave 4 here. That would invalidate that further up. And in that case, we'd have to figure out what's maybe going on here. I don't know. The idea, you know, is this a truncated fifth? You know, again, guys, I'm not a big, most of the time, if you think you have a truncation, usually it's just a bad count. You know, there's some times where you can get in there and go, okay, yeah, maybe there is a truncation in there. But it is, for me, you know, the market has to prove that the chart has to prove that it's a truncation. I'm not going to assume a truncation on it, truncated fifth. Yeah, you know, there's possibility that this could be a flat kind of correction here. Sure. You get maybe, I don't know, maybe an A, B, C here, and then an A, B, C, and then another 5 down. That's possible, sure. But in that case, of course, you're going to want to see 5 waves down. Let me see here. Yeah, you don't want to see 5 waves down. You're going to want to see it end probably right around this wave A here, right around 13,720 or so. Now it could go further, and maybe to go further down here to the S2 pivot. But again, that's why I'm saying, you know, the only thing that would invalidate this count as it sits here is this move below wave 4 here. But if we're coming down again, that is a possibility. Again, A, B, C for A. And then this, well, I guess maybe, God, you know, how would you look at this? Maybe get an ABC here for A, and then an ABC up for B. I'm sorry. No. Yeah, okay, so you get your ABC down here, and then you get your A, and your B is going to drop a bit lower here. And then you get your C up here, so you're going to do a flat for B into that. I don't know. That possibly, yeah. I don't like it a whole lot. I'm trying to think there's another way you can actually draw this in there. Because your swing low is this one over here, I believe. Let me see. 13, 7, 16, 76. 13, 7, 17, 44. Yeah, so your swing low is this one over here. But this is not 3 up right here. I mean, it looks like a pretty clear 5 up. So that would have to be part of a wave B flat. And so you have ABC for A, and then a wave B as a flat gives you your ABC, and then you have 5 down for your C. Yeah. See here. So, you know, potentially, you know, it's definitely a possibility. We'll have to see how it plays out. But as long as it just does 3 waves down to the pivot area here and then kind of makes its way up above that, you know, we're going to go with this count as it is. If it's making on down here in 5 waves, then we'll look at the possibility of this just being a flat here. Sure. So yeah, good eye there for sure. But we'll have to see if it gets there first. Let's see. If we look at the E-minis, I don't know if any of you guys trade these. So that was the Nasdaq. These are E-minis. So E-minis, I've kind of got this count going on here. So I've got this as I've got the 4 completed back over here on the 20th. That was about a week ago. And then we've got this good impulsive move up 1 to 1 here, which had a couple of different counts in there, and it was hectic for a while. But I think we got a 1 and a 2 on that pullback, which gives us a 1, 2, 1, 2. And then you get a 1, 2, 3, 4, 5. Gives us that 1, 2, 3 triangles, a 4 and a 5 on a thrust. So that gives us just a 1, 2, 3. We've got a 4 on this pullback here. Potentially, it looks like an ABC here. So if we get a move up above kind of this 41.85, we should be looking for a wave 5 target up here of around 42.13. But that's just circle 3. Then you get the pullback for 4, which comes down to around the previous 4 here, the lesser degree. And then that gives you a wave 5 move up after that. So we'll have to see if this 4 is done here. If it's not, I would look for it to complete right around the pivot. I think that's the 50% retracement right there. Let me see. I think right now it's bouncing just above the 38.2. Let's see here. Yeah, see, just above the 38.2 there. Well, maybe just on it. Put this right here. Just above it. So, I mean, as far as a wave 4 goes, we generally look for 3 waves back to the 38.2, and we've got that. We've got what appears to be, an ABC here to the 38.2. But as always, 50% is your next target on the way down, and that's still a very valid wave 4. And so, finding, support on the pivot and bouncing up, that would work as well. So, yeah, if we're looking at that, I think it makes a good bounce here. So we just need to move up through that red line, and that should increase the odds that we're heading up toward that 42.13 kind of area for wave circle 3 there. You waiting for the S&P to start dropping, XT? I think, here's the thing, though, guys. I think when it does, I think when we hit this top, I think it's going to be a strong move down, a substantial move down. I think, again, last March, of last year was kind of like your warning sign. It was your, hey, pay attention. It was your, it grabs you by the shoulders and shakes you as hard as it can. Wake up, pay attention. And people use, and it was such a strong drop that you're going to get that strong reaction, and, it pops up one more time. I think, that next time it just kind of really just rolls out with it. And, other things are aligning with it. If the dollar's rising, I mean, that's what you would expect. You expect the stock market to drop. So if the dollar's, starting to gain if it starts gaining some momentum here and starts pushing up higher, you would generally expect stocks to drop. You would expect generally your risky assets really to drop as well. So we'll see where it all plays out here. The Dow. March 2020 was the dead cat to rule all dead cats. No, because if it's a dead cat, it would have to be... it couldn't make a new high there. It would have to be a lower high. But it's kind of like that last like sprint at the end. It's that last kind of, everybody got, a lot of people got scared out there, but it was such a sharp drop, back in March that there's reason to buy at that point, ride it up a bit, and then everybody starts pulling in after it thinking that's the bottom. And so again, it makes that last kind of sprint higher to finish out before it potentially all comes crashing down. Potentially. The Dow Jones here, I've been looking at a possible triangle here. So we get, WXY for A, then we have an ABC for B, ABC for C, ABC for D, ABC for E maybe here. Trying to get a push out above that pivot on the 1 hour. Stochc RSI is not bottomed out, but it's down in the lows here, trying to potentially cross bullishly here. We want to see this curl up a bit. Get some impulsiveness on the move up and through this. But if we can and we get above this wave D here, that gives us a pattern target of 34,341 and 30 cents. We've got a secondary target up here of just around the R2 pivot there at about 34,459 and 30 cents. So we'll wait and see. We'll see what it is. Usually triangles, you're either going to get a fast, harsh thrust out of it, or you're going to get some over elongated fifth wave. Those are usually your two responses to a triangle as a fourth. So we'll sit here and say, the harder it pops out of here and thrust up, the more likely it's going to be around this pattern target, area and kind of go back. If it takes its time heading up there, we might see further extension well above this secondary target even here to go up there to finish that fifth wave. Yeah, but again, everything else says it's not it. Says that, March 2020 isn't it. So while, nobody can guarantee that it is or isn't, if we look at historical, if we look at history and we look at all the gauges and things that we watch, all the sentiment indicators, all these other things that we watch, everything is well above where it's ever been previously. Margin debt where it is, all these things. So, I think if you can play the, again, as I keep saying, you can play the move up. But I think if your default is to believe it's the beginning of some new, 10-year bull run or whatever, I think that's the wrong way to look at the market if you're trying to do it intelligently. Because what you have to do is then you have to ignore everything else and just say, this time it's different. It's never been different. In the history of markets, it's never been different. Things have never been different. They've always been the same. Why would it all of a sudden be different now? Now, that doesn't say that it can't be different. And this is the thing I don't think people get. Nothing says that it can't be different. But it's just, what are the odds? Really, what is that likelihood? Why would you take the position that this time it's different when hundreds of years of history tell you it's not? That it's most likely not. So yeah, that's kind of what I look at, So yeah. Oh my gosh. How many other big corrections have there been in the last 30 years? Let's see, you said 30 years, huh? Oh man, you're not going to say 33 years? 34 years? Let me get in the 1987 Black Monday. Dropped like what, 40, 50% in a day? But yeah, but in response to your question there, Hank, that's the whole, that's the whole thing I keep looking at here. If this is the big one, if this is the big thing, then, you've got all these lead ups into it. And then here we are. And then we get, the big one. I think it just pays you more, it's a much more intelligent trade to expect that it's going to be the same and to continue to ride up what's going up, all the trends up, continue riding it, but be ready to, take profits rather than assume that any pullback is just going to be bought up and continue higher. Yeah. So, when you're looking at that, I think if you're trying to be an intelligent trader, I think you have to look at it that way. I think if you're being contrarian just because you think it's cool to be contrarian, just because you've watched The Big Short and you think, that's not. I don't think you really understand what it means to be a contrarian investor or trader. It's not just taking the opposite position because it's the opposite position. If that's how you trade, you're going to lose a lot more money than you'll ever make. For sure. Well, 2000 to 2008 was just sideways. I mean, if we look at it in terms, I've shown you guys this before. If we look at it in terms of Wyckoff, it was just a reaccumulation. Let's see here. Let me get monthly in here. See this right here? It was really, 2000 here. You see, so you get your buying climax, your automatic reaction here to your rally. It gets to this up thrust. You get back here to a spring, moves up. LPS here, last point of support, pushes up. Last point of support, pushes up, pulls back, pushes up, pulls back, pushes up. But this right here, this 2000 to basically 2012 or whatever, this 10, 12-year period here was just a reaccumulation period. We had another one back over here from 66 through 82. Just a reaccumulation period. So yeah. And Brian says, imagine, what's going on, Brian? Says, imagine a Bitcoin downturn where shorters start to bankrupt offshore exchanges and they just take your Bitcoin from your wallet as an exit. You know what they say? Not your not your keys, not your Bitcoin. So yeah. Hank's saying, yeah, that's what I meant. The incredible V we saw after March 20 is more like the 2008 one, still very fast. Yeah, still is, but, again, when we look back through here, definitely, again, you have this whole period of sideways here from 66 until 82. So again, guys, when you say, 50 or 60 years is unthinkable, I mean, 66 to 82 is already what? 16 years right there. I mean, just kind of going sideways in that. If you look at the Great Depression, it took it, at the top there, right there in 29, and it finally breaks out to a new all-time high in 55. It's 25 years. Right here, from 2000 until 2012, 12 years. So, again, when you look at that, for that continuation up, you're already talking decade plus. And that's in these much shorter movements here. So when you zoom out, to 1788, this chart only goes to, I don't know why this says, this says July of 96. Okay, 1896. Man, I was stuck on 1996. But yeah, this only goes from 1896. To about 130 years prior to that, still where it starts. When as I showed you last time, when our Constitution was ratified. What's going on, Lewis? It's too easy to focus on the top of that channel. CBF says Marty Schwartz tells a story about Proctor calling for a massive drop for years and years as the market moved higher and higher. Yeah, again, nobody knows for sure. But we do know right now that everything is at extremes right now. As I showed you, if you weren't with us last Friday, go on to YouTube in my archive videos there and look at last Friday. And I bring up a chart that shows, all the fib extensions and everything else coming off that. I mean, I think there's a lot more to it now potentially. And again, when you're talking about hundreds of years of movement, we can, as we know, markets can stay liquid longer than you can stay solvent, right? So, how long does it take to kind of hit that? We're talking about the credit bubble here. We're talking about the everything bubble. I think it's kind of, I don't know, when we look at that, I think it's hard to really expect that it continues up, looking at what the Fed's having to do right now and what may be happening. And, we've got this wealth gap. And then you look, again, you start looking at how is society acting right now, compared to what it's been. There's a lot of change. There's a lot of things going on right now, which is generally what we would expect at large turnings. Historically, everything works in cycles, right? So yeah, we'll see that there. Let me see here. So anyway, again, we'll see what happens. And you know what? The worst case scenario is this doesn't happen and we continue to fire up and we all make loads and loads and loads of money, right? That Biden ends up taking from us. By the way, guys, just remember, I'm not a fan of this whole idea of raising these income tax levels to, almost 50%. But it's not 50% of everything you make. Remember, guys, it's a gradual system. And so, it would be basically, 48 point whatever percent of anything you make over $1 million. But still, think about it. Government's going to steal from you. They're going to force you to give them half of everything you make over a certain level. If you think that's okay, man, I think you've got serious problems, honestly. I don't think it's okay to force anybody, to give you money. I think it's absolutely ridiculous. Oh, but government does this and government does that. And you know what? I think a lot of that's a bunch of BS too. Again, everybody believes what, the pro-government supporters tend to believe what government tells them without actually looking at what the numbers really are. Government says they're making you safer, but are they? Government says they're making your life easier, but is it? My sister just started getting her insurance bills. As you guys, if you've been around a few weeks here, a month or two, you guys know that my brother-in-law is in the hospital. He went in for COVID, developed ARDS while he was in there. And, he's basically clinging to life right now. They've had him hooked up to this ECMO machine, which is basically, if they didn't, he would have died. A big old tube going into the artery in his neck. And they have to give him blood thinners so that blood clots don't form. Because what they do, they do that because your lungs aren't working strong enough. And so they pull the blood out of you, they fill it with oxygen and send it back in, right? So that way your lungs can hopefully get better and start picking up, their work, because, they're working like 20% or less. And the problem with doing that, though, is that it means that you continue to bleed. So getting awful, nosebleeds and, bleeds around the incision there where they've got the big old tube going in, they do all that. And so they do that, right? So he's been on that for 4 weeks now. He's been in the hospital for about 6 weeks. Okay? He's been doing that for 4 weeks now. He turned last week. He finally started showing some potential signs. He was finally starting to show maybe that he was doing a little bit better. And he turned and coughed as he did when he was in the bed there in the hospital, and it tore a hole in his lung. So they had to stick a chest tube in his left lung because it collapsed. And I think they just took that out, But because of what happened there, it ended up causing problems with his, it damaged his kidneys and his liver. Things what I was told. So now they've got him doing dialysis as well. So, doing all this. Now I bring this up because, government says, Obamacare has been this great thing, right? Well, because of it, the amount of money that the bills that are coming now are just astronomical because of this. Because of the way in which Obamacare works. And so, again, really kind of ridiculous. And then I'm sure I'll have somebody from some other country say, oh, yeah, well, you know what? We've got all this free health care and it's great and whatnot. And okay, maybe you think it is because you've been raised in it. But, again, I think the insurance industry really, again, with the way the U.S. is set up anyway, lobbying is encouraged, right? The way the system's set up. In insurance, there was a reason why insurance wasn't too upset about Obamacare coming through. But again, my whole thing just goes back to, people, often are going to believe their government tells them, oh, you're safer because of us, or, you're more taken care of because of us. And in the grand scheme of things, you're usually not. But you have to give up a lot to do that. And again, if you're from another country where this is normal for you, where government takes 50% of your taxes and, but, I get free this and that. Well, you don't really get free. That's all that money they're taking away in your taxes. But if you grow up in that, it's hard to think it's terrible, right? Or it's hard to understand why it's maybe not as great as you think it is, because you're used to it. It's your normal. I get that. Here in the U.S., what we've gone through in terms of healthcare change in the last, 10 years is definitely, things are not normal. Things are a lot different. So, it is what it is, guys. Governments are there, people think that governments are there to serve the people because that's what governments tell them. But governments are not there to serve you, period. They're just not. I think if you think otherwise, you just haven't really studied it enough. You haven't really looked at what's really going on. It is what it is. Most people haven't. But then again, most people are scared to have to take on the responsibility of these things for themselves. So again, when we turn this over to, for a while there, the big mantra for Bitcoin was you get to be your own bank, right? Nobody wants to be their own bank. Nobody wants to have to worry about that. They'd rather a bank worry about that, right? government says, oh, well, we could tell people, listen, you want to be free. You want to take care of yourself. But that means you have to, take care of your own security, right? Most people don't want to take care of their own security. They want government to do it. But then government doesn't really make you more secure. Government gets involved in wars because of, and most of the time, not even because of themselves, but because of their, when you're in the position of the U.S., because of your allies. How is that putting me how's that making me any safer? It's the guise of security, Government works under the guise of making your life better. At least those that, say they're going to. There are governments out there, obviously, that really, clearly not so much, right? It is what it is. I haven't even looked at the chat window right now because I know I'm probably getting a lot of flack from people outside the U.S. It is what it is. I get it. You guys think what you think, and that's fine. It is kind of what it is. I happen to have quite an extensive background, unfortunately, in these matters, political theory, philosophy, what is it called? Applied psychology, homeland security, law. Those are all my degrees, So, I'm pretty well read on both sides of the matter. And that doesn't mean that what I think is definitely the end-all be-all truth. But, I do have quite an extensive kind of education in that. Having to see both sides of it, and that's the conclusion I get to. So it is what it is, right? All right. But anyway, the U.S. goes to war because of which allies? Which allies? Because of all allies. Yeah. The U.S. has all these treaties and whatnot with all these different countries, and we give all this, this foreign economic aid to all these countries, and we promise that we're going to protect them. If so and so gets them, whatever. I mean, it was very much prominent. It was all about. I don't know. There's really many people in the U.S. that didn't know who were allies and who weren't back during the Cold War. Was the U.S. against the USSR, right? East versus the West, right? West versus the East, whatever. Nowadays, it's just the U.S. Against anybody else that wants to go against the U.S. But it's crazy the way it works out. And the problems it causes for the people, but the people never look beyond it because they're too busy. It's all about the bread and circuses, right? Everybody's more interested in the Super Bowl and voting for the next top model or whatever those crazy, silly shows are, and doing all that. And not very many people really pay attention to things that are going on in the world. Which is why most people in the U.S. can't tell you where places like the UAE is, or the Netherlands is, or anything like that. Living in the U.S., everything's U.S.-centric, right? Just is what it is. It's unfortunate, because it just allows, the government to continue to do what it does. Let me see here. Let me see here. Oh, no, I'm not saying that U.S. only goes to war because of allies. No, you misunderstood. You assumed something I didn't say. I said it goes to war because of allies. But it also goes to war on its own. War is a racket. It's a profitable racket at the end of the day. Excuse me. The Netherlands isn't the capital of Belgium, Bianca says. Oh, Lord have mercy. Excuse me. Could we check out Ethereum and Bitcoin? Sure, we can check that out. Let's see here. It's been following my my chart pretty well for, gosh, however long it's been here now. I guess for months now. So it's been doing well. Oh yeah, public education is a mess for sure. Let me see here. I'm still reading that comment by Bianca. That's too funny. Anyway, so I'm looking at here right now as probably wave 5 in motion here. I think we're going to get a bearish divergence form on here. I think. This is the 4-hour, by the way. Oops. Oops, let me get that to make sure it just says that on the 4-hour there real quick. Visibility. Yep, there we go. Get that off the 1 hour. And, from here, we've got possibly a 1, 2, 3, 4, 5, maybe as an ending diagonal. This may be printing out here. Normally, wave 5 would be expected to get up here around this 0.052304 kind of area. But again, this could be an ending diagonal right here. So if this drops down below wave 4 here at 0.4351, at 0.04351, that should tell us that this wave 1 up here is done. And then we'll be looking for a pullback. And so that would just depend on wherever it hits. If it ends right about where it's at, again, probably looking back down here toward this 0.0352 to 0.0368 kind of area. I mean, there's always a possibility you could hit the 50 and pull up from there at 0.039. But there's a good cluster of activity right down here at that 61.8 to 70.5 area. So again, just depends on where that ends on that right there. Let's see here. Let me see here. I mean, I got you all talking about politics, huh? Yeah, Brian's bringing up the 16th Amendment and not sure where capital gains is mentioned. I'll tell you what, guys. Yeah, CBF says healthcare, war, education, anything we've missed. I know, right? I do this every once in a while. But yeah, Brian, it's funny. You talk about the amendment, and I'll tell you so going into law school, I already had a few master's degrees. Again, I had a master's degree in applied psychology. I had a master's degree in homeland security. My undergrad was all about, again, finance, economics, and philosophy and political theory, right? And so going into law school, I was already aware that laws were not simply black and white. A lot of people tend to go, oh, well, that law clearly says you can't do this, this, or that, right? But when you go into law school, and those of you who may be lawyers on here, or at least, attorneys, or you have your law degree, you can back me up on this, you find out just to what an extent they aren't black and white. And so you go in there, and constitutional law is a great class to take, because it really, really brings that whole idea of the judges and the courts and how they decide things really into clear view. And when you look at that, it really becomes so interesting how just the way if one word is used instead of another, and the way in which the judges look at that to determine what they believe that was meant at that time with the thing. And so, yeah, it gets kind of crazy when you look at that, and, people are like, oh, clearly, this law meant this and that law meant that. And, usually people that have a law degree kind of chuckle a bit and go, it means whatever we can get the court to believe it means. And that really is where it is. Now, here in the U.S. anyway, with the, this adversarial system that we have, generally, courts are going to look at previous decisions in their district and whatever at their level as the most as the most support for whatever is likely meant. And it's really difficult to get a law overturned that's already had something similar decided. You have to really provide it in some new and novel, present it in some new and novel way, and then hope to God they can get off of what was said before and kind of get their thinking to the other way. But, if a court really just erroneously decides a law, decides what's meant, I mean, it can be really next to impossible here in the U.S. to get it to ever change. It's crazy the way that works. A friend of mine used to say if a lawyer had written the 10 Commandments, they would have had 10,000 footnotes, says Hank. Sadly, it's required. Because again, it's all about it's not even so much what's said, it's how it's said and what actually isn't said. And if you can bring a similar case in that you can get the court to believe deals more with what was not said or more with how a thing was said, and you differentiate your case from something that seems pretty much similar just because of how a thing was said. I mean, that's the way to do it. I mean, that's how it's done. Otherwise, you're just stuck with whatever was what was decided previously. So yeah, it's not that lawyers want to write footnotes and all this stuff. I don't know of many lawyers who actually enjoy writing, legal writing. But it becomes it's because of the way that the law is. Unfortunately, the more you leave open-ended, the more somebody can come in again and approach a similar case in a new and novel way and get a different result, potentially. Yeah. Hey there, Crypto Girl. Good to see you. Data says even coming from Germany, he knows where Arizona, Colorado, Atlanta, Ohio, Indiana, Montana, and whatnot. But the Netherlands and Denmark, Norway, Croatia, all that I don't have a clue. There somewhere. Hey, don't feel bad. Most Americans don't know where Arizona, Colorado, Atlanta, Ohio, Indiana, Montana are. So there's that as well. It's not just U.S. centric. It's your city centric or your state centric here in the U.S. for sure. Sure. Hank says, just think about the degrees and exceptions we have established regarding what seems simple. Don't kill someone else. Yeah, exactly. But then you go, okay, well, does that mean I can't, does that mean I'm going to be in trouble for killing somebody if they're trying to kill me? Well, obviously the situation's not the same as you just going out there and finding somebody on the street and walking up to and killing them, right? So, I guess I go with all that to kind of say life itself is not black and white. And if life itself is not black and white, then anything that's a derivative of it, that means laws, societies, governments, finance, economics, all these things that derive from people are not definitive either. Which is why it becomes difficult to understand, many times what's going on. But people want it to be, and people believe that things are guaranteed and definitive, which when they get into markets then, that ends up holding them hostage because they play it as if it is. And then they're confused when it doesn't work out as they expect it should. And they have a hard time letting go of the idea that it is and just accepting that it isn't. And if you followed that, 10 superhero points for you. Hey, Jay, man, I appreciate you, buddy. Can I look at XDAI again? Yeah, let me see here. I always got to think about that one. I never look at it. I think you're the only one that asked me about that. There it is, right there. Yeah, let's see here. So we had this kind of pulling out as 2 here. Let's see here. Did it get to a lower low? Let me see. 1624. 1624. Wait, where is it? Shit, man, just barely above. So we've got 16.24 over here is the low. And then over here we got a 16.24, 1686 kind of thing going on there. This looks pretty clear like an ABC down. It is possible that this could end up being, let me see here. I got to see how high that goes. Let me see. Pull this out here a bit. Remember, guys, if it's going to be a flat correction, it really needs to hit that 90% retracement, okay? If it doesn't hit that 90%, no. See, we barely hit the 78.6 on this one right here. Now, I can see an A, B, C right here. I mean, right now, it still holds as the count shows right now. And then this just becomes a... like a 1, 2, 3, 4, 5. So you get a 1, 2, 3, 4, 5. And then you have an A, B, C here. And then, so in terms of pivots, you know, we dropped through the pivot, so we expect to get a bounce here at the S1, and we're getting that. We are down and oversold here on the daily for Stochk RSI. RSI is not, but RSI is also showing a bit of hidden bullish divergence here. So we've got a lower low here. And let me make sure I get this on the daily here. So we've got a lower low on the oscillator here. And as I just showed you, we've got a very, very, very slight higher high, or I mean higher low here on these. So we've really got some bullish, some hidden bullish divergence potentially in there. I say potentially because we really need to get this move back up to say it is. Now, here's my issue. I don't know. It might not be an issue. It might not be. I don't like that the 4 hour is so over, is just overbought here. We're up here. But, again, we've dropped out of overbought, so it could curl up and head back up in. And RSI itself is still pretty low. Now, if we're looking at the price action and the volume here, we've got this spike of volume on this attempt to push up. So, it looks like all that volume probably came in around the pivot here, which is where you would expect it to. And then we close down lower. So that isn't bullish right there. Let me see here. Yep. See, this is the 1 hour. Spike of volume coming right here. Doji. And we're just kind of hanging out right around the lows of that doji there. And let me see here. Let me see here. If we're looking up here. I mean, I could see this. Let me make sure that the lows here aren't lower. 162416, 16, 8695, 901. Okay, so very, very, again, even a slighter higher low here. So I can see a possibility of a 1, 2, 3, 4, and a 5 as like getting this kind of what do you call it here? Leading diagonal. I can see something like this happening. And then if it does, again, potentially just popping out above the pivot a bit, maybe getting up here to 21.6, 21.7 maybe. And then dropping back down, but then finding support right in this area right here. So then you get kind of this 1, 2, 3, potentially 4 here. We get 5 up, brings you to a 2 here, and then 3, 4, 5 as you go up. And so, depending on actually how far that gets, you might look at wave 3 potentially being up here around 25.5 or so. And then, wave 5 being up here, what is that, around 27. And if we look here, that gets us right into this supply structure right here. Almost at the EQ. So I think if the count is correct, then I think we're probably seeing something like this. But that advance, which would likely come in wave 3 above the pivot and it stays above it, that's the move to look for. Because I think we'll just get like a peak up above it on the pivot here and probably a return back down and then moving up there. Hey there, Teo, good to see you, man. Let's see here. Wait, Polo has a $100 USDT withdrawal fee now? Wow. I remember, okay, so when I first came in to trade crypto, guys, back in January of 2017, I got into crypto via, the on-ramp offered by Coinbase. This 2017, right? But I traded on Polo. And then by the time summer came around, I think me and pretty much everybody else kind of more or less moved over to Bittrex. And so, man, seeing that $100 withdrawal fee there on Polo, that's crazy. Oh, that hurts, man. Gosh. Jay Quinn, you liking the fundamentals on XDAI there? Yeah, again, I think it's probably here. The only thing that's going to change this is if it drops below that swing low. Let me zoom out here real quick and kind of see where we're looking at everything on that. I mean, your 1 hour here is almost reset down. It's just on the negative side of neutral, just on the bearish side of neutral, as is RSI. But it's been going sideways here, and it's been coming up off of, at least the RSI, out of oversold. So even though it's kind of been going sideways, it's still slightly higher highs and higher lows here. So you've still got this uptrend there on your 1 hour RSI. But yeah, I would expect to see something bigger move out of that. If it's not, this would have to be something like a 1, 2, 3, 4, 5 down, and then a 3 up. But if we're looking at that, look at this wave 2 over here came very close to this wave 2. So it's not weird that it's getting that close there. It's done it already as well. Let's see here. So we're already right here around 78.6 on that pullback. Right around the 70.5, and I love that 70.5. I don't know. I think if it does break down, I think you'd probably be looking closer to this 10.5 down here around the S2. But that's just right now, while the pivots are where they are. This 78 is nice. I mean, this 78 right here. Again, if you always look left, guys. And you can see how nice this works here as support resistance going through there. So that would be my first target if it was to continue dropping down. And then I'd probably look down here toward the 90% area. But for right now, it's still holding as this count here. So I think, for now anyway. And then, again, it's got this previous point back here where wave 2 pulled almost below wave 2 before it did that. So yeah. Definitely hit me up, Jay, sometime if this kind of takes up and through here and gets above wave 1 here. And I'll do an update on this count. There's a couple other things I'm seeing here. This should be a minimum at least, but there may be something larger playing out as well. But we got to see if we get a reversal off here like we're looking at right now. So, yeah. Bianca, have a great day. You learned and laughed a lot? So we're getting some pullback here on Bitcoin. Demand's trying to come in. We're getting lower lows right now. 1 hour, there's room to fall in the Stochh RSI here. RSI definitely has room to fall. RSI looks like we might be printing some bearish divergence right here. Let me check that out and see where that's at, actually. Let's see. Come on, there we go. Yeah, see, that gets you kind of right up in that area. And then you have this last bit here, these last little bits here, these last 2 swing highs. You got a slightly higher high here, lower high there. So more bearish divergence showing up as it kind of tries to pull there. Right now, it's just finding support. Again, guys, as I keep saying, look left. All it's doing is finding support right here on this area. Look at how this line, see how we go through there? You got a little dips here or there through it, other than your bigger ones, which is this next area down, which, again, if you look at that, see how it all works in these same areas? So, we're getting that. So if you drop through that, you should be looking down here toward, again, the 38.2 at about 53.462. If you can lose that, again, you've got this kind of swing low here, but I think you're really kind of looking at the pivot. You might bounce on the pivot and then drop through. But we'll see. You got to get through this pivot here, and you've got to close down impulsively through that pivot to really kind of say, okay, I think maybe we've still got wave 5 to go down here. And then that changes everything. Then that becomes potentially much different. Because at that point, you've potentially got here just 5 waves down to here, which is just a wave A or just a wave 1. If this is the larger wave 3 playing out, let's say it topped out here rather than over here, or heck, even if it topped out here. But again, if you look at maybe as a ending diagonal here, if this is an ending diagonal, as we talked about, you should be looking for price to target this area down here toward the lows. Ending diagonals, your initial target should be the low down there to where it kind of gets up there, right? But again, if this is wave 3 up here, you could have a much larger decline here for wave 4 before we get that wave 5 up. There's no telling at the moment, guys. That's what I'm trying to tell you. You can trade along with the direction. Look for your, your higher confidence trades. Don't enter a trade just because. This was a higher confidence trade here. Again, you have lower lows. You got higher lows here on the 1 hour. So, that was definitely a reason to buy there. And you look up toward this large triangle as your target area. Bouncing off that. So that's your higher confidence trade. Where we're sitting at the moment, there isn't really a higher confidence trade at the moment. Not every day is a tradable day, guys, okay? For every asset. Crypto BTC Anarchist, man, you're very welcome. Glad to have you. Glad to have you checking in here. I can't even talk. Actually, you want to look at Sol USD? I might have a chart. Let me see here. I do have one from, let's see how this has changed from almost a month and a half ago. It's probably higher than whatever targets I might have had. Let's see here. Oh, no. It's going right up there. So this is my chart from the 10th of March that Discord had, Tier 3 had. And it's possible the top may be in here. Oh, no, you know what I did? I think I moved this. I think I moved this up. I think I had a lower low here. And then the other day, maybe that was you, Ashley, that asked about it. We have it looks like we've got a 1, 2, 3, 4, 5. So maybe like a ending diagonal type thing going on with wave 5 here. So we'll see if it comes on down. If it does from where it's at, we've got a wave 2 probably around here about $19.25 maybe. Again, it's down, toward this wave 4 area. $20 there. We'll have to, but it needs to kind of come on down here. Now, as far as we go here, see here, there we go. I mean, it was a decent pullback here, but we really want to see some follow through to get below this April 25th candle here. We are up here. Oh, wait a minute. There might be some bearish divergence here. Let's see, 82.60. 82.46. All right, so we've got some very slight bearish divergence. From this point over here to over here, which is a bit much. So, we've got all this in here. So questionable, but, in all this extra move up from basically $30 to $50 there, over 50% increase in rise there, RSI was not able to, get to notch a new higher high yet. You can see that the volume really kind of kicks up in this area here. So what does that tell you? That tells you there's a lot of interest in this area. There's a lot of supply coming in. Now, demand is winning out overall in this move up, but you cannot ignore the fact that volume was generally staying down here. And as you're up into this last, this area here, all of a sudden there's all this huge volume. People are selling into this right now. Now, that doesn't guarantee that it's got to go down, but it definitely explains why you have these slightly higher highs here, which are creating what looks like a possible ending diagonal here. Let me see here. Sol at 19 would be such a break of MS that it would mean the entire market is collapsed. What market you talking about, man? Let's see here. Yeah, again, see, here's the, 1, 2, 3, 4, 5. A, B, 1, 2, 3, 4, 5. See? Possibly. This is the 4 hour. You're going to want to drop. You want to see some impulsive move down below the 4 hour pivot. Let me zoom in a bit here. We might have just about 5 down at least off the top. Let's see here. We got a 1, 2. 1, 2, 3, 4, 5. No, that wouldn't work. Zoom in here a bit more. Let's see here. We've got 5 down here. We've got 3 up here. You got a slightly lower low here. Let me see. What is that? 44.80. 44.79. So it's not a lower low there. Yeah, so maybe like a 1-2. Could be a 1-2 playing out there. And then moving down. It looks like here anyway, we've got a 1-2. And either this is a 1-2, 3, 4. This is a 1-2, 3, 4 here. So either way, it's looking like we've got some more downside to it. What you definitely want to see, though, if you want to see if it's bearish, is see if you get some kind of impulse through the pivot and below this kind of 4-hour swing here at $48.21.9. That would kind of suggest that, yeah, this is probably an any diagonal here. You're kind of pulling back some in there. Let's see here. No, I don't know if you're talking to me. I know what MS means. I said what market? You said the entire market has collapsed. That's what I was interested in. Well, we are kind of at the top here. We'll see how this plays out. I want to see if we get that moving down. If we don't get that move, well, I don't know, man. Look at that weekly. Or that 3-day, I'm sorry. Yeah, 3D candle right there. So you get this spike here on this one, and you've got almost as much volume right now in the current week's candle. And think about this. If we look at the volume here on the, I say weeks, on the 3-day. When did this one happen? The 25th? Oh, okay, yeah. That's fine. We're nearing the end of this 3-day candle, but pay attention. Look at how much volume there is, almost as much as there was in the previous 3-day, and look at the difference in those candle spreads. So relative, much more effort, much less result in this current candle than what we had in the previous candle. You know, if you look at this candle relative to this one, overall, a little bit less volume, much less, or a little bit much volume, so a little less effort, a lot worse result though. So far, got to see where it closes at there. God, look at this weekly. This weekly has been topped out, practically topped out here. Just little bouts back and forth out of it since the 11th of January. And if we're looking at the weekly here, I mean, that looks like a 1, 2, 3, 4, 5. We've definitely ran through the pivots there. There's your monthly. Yeah, I mean, I wouldn't be surprised to see this thing nearing a top right now, or at the top. We'll see. We'll see if it gets that drop down below on that 4-hour. Right now, we're right here. We're finding resistance there at the 3-day R5 pivot. Finding support at the moment on the daily R5 pivot. But again, with the idea that we've got this slight bearish divergence showing up here over that big area. Got a lot of volume coming up here, which is a lot of selling. Again, selling doesn't mean that it has to come down, but you absolutely have to acknowledge that this could be a top here because of this amount of volume that's coming in right up in here. So if the volume keeps coming in, your buyers are going to get exhausted, demand's going to get exhausted, and supply is going to take over. Yeah. So, anyway, there we go, guys. Listen, it's 1 o'clock. I need to get out of here. I really appreciate you guys checking in and discussing things and listen to me talk about my opinions on things. But you know what, guys? At the end of the day, opinions are like, never mind. We won't go there. They all stink and we all have one, right? you know, really that's all it is, guys. Markets is all about opinions that people derive based upon their particular things that make them who they are. You're included in that. Whatever education you have, whatever social circles you run with. God, that's the word I'm trying to look for there. You know, all these things kind of make up how you look at life, and that then extends into how you look at the markets. So, you know, I appreciate you guys coming in and checking with me, just see what I'm thinking, and hopefully learning a lot about trading. And, you know, a lot of the less tangible, you know, the less tutorial type stuff, and really paying attention to more of the of these ideas of how and why we come to the decisions we make and view the things the way we do, so that hopefully maybe you can find, you know, whatever kind of things are maybe influencing you in a way that you'd be better if they weren't, and, you know, being able to take advantage of that and making your trading a lot better. That's what it's about at the end of the day, guys. You know, again, I can't guarantee you that anything I say about the charts here or what's going on with the, you know, grand macroeconomic atmosphere there is going to play out. And you know, to that same extent, the Fed can't tell you that either. And they know that. That's why they do what they do, how they do it. You know, we're all just kind of trying to, you know, move through these markets as we can, right? So, but the less of the extraneous stuff that you can, you know, have in you, so the more you can take out, the more you can understand about maybe why you think a certain thing or how you've gotten to that point. Maybe you've never thought about it. You just assume. Most people do that. They have a belief because that's the way they've always heard it. They've never really thought about it. They've just kind of come to accept it as what it is. And in the markets, you don't ever want to do that. So, you know, if you can figure that out and then get in there and say, hey, wait a minute, maybe I need to change this or that to make me a better trader. That's what it's all about, right? All right, guys. So y'all have a great day, a great week here. Don't forget, we'll be back on Friday at 11 a.m. Central Standard Time. We'll do this again. Until then, you know, obviously, if you'd like to join us, you can do so here at howtotradetowin.com. If you do, all you need to do is make sure you get your Discord username. You've got a link in your account when you log in to get to the server. If you don't already have one, make up a name, go back to your account here on the site, and then there's up in the left-hand corner in your account page, there's a link that says upgrade your or update your Discord username. Just go in there and type it in, the number sign, the 4-digit definer thing that's with it, and it'll automatically give you access to Discord then, guys, all right? If you need any help with that, don't be afraid to contact me when you get on the server, or Adam Harris, and we'll get you set up, help you get set up, and get you in there, okay? So there you go, guys. Thanks so much for checking in as always. I hope you guys have a fantastic week and trade safe. At the end of the day, guys, it's all about helping you to learn more about who you are as a trader or investor, and then how to best capitalize on that to make money in whatever market it may be at any point. All right? Remember, the only thing you control in the market is how much you lose. It's all about that risk management. Y'all have a great day. Take care. We'll see y'all later.